Hey, this is Matt from InvestQuant. Today is Thursday, July 22, 2021. Yesterday was another strong day for the market. So it gapped up in the morning and made almost no attempt lower before starting to work its way higher throughout the session. It was kind of a grindy day that just kind of worked higher, consolidated, and then worked higher again into the close. We ended up closing up between the R1 and R2 pivot, which is a pretty strong close when you're closing up above R1. And it's doing so coming off of these recent lows. So we've got kind of a unique pattern where you were trading below the 10-day moving average the day before, and then the following day, which would have been yesterday, we closed above the 10-day moving average. So that kind of shows some strength coming off of recent lows. And in doing so, it closed up between R1 and R2. And that's the pattern that we'll be looking at this morning in Discover. So let me go ahead and set it up. I'll go ahead and grab all four instruments. The setup's based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time. The exit is set to 4:15 p.m. Eastern Time. Now, currently, we are continuing higher again in the overnight session. So I'm going to add that to the test here. For opening filters, I'm going to say that it is gapping up, and this is important for this test. So if by chance the market was to reverse ahead of the open and trade lower, then you would want to change this gap direction, because it will change the stats on the setup that we're going to be looking at here momentarily. But I've got that selected here. Next, I'm going to go into the price patterns. And I'm going to say that yesterday closed between R1 and R2. The easiest place to find that's going to be in the active today section, which tells you all the things that are true from this library for today's session. So if I go to the last or the location of the last close, and I just kind of move my cursor down until I find it. There it is, close between R1 and R2. I click on that, it adds it to the test. It actually comes from this little category right here. There's a ton of different options within this category, and if I scroll down, way down here, you'll be able to see where exactly it comes from. But I've got that added to the test. Next, I'm going to go to the indicator section, and I'm going to use this MA straddles. That stands for moving average straddles. And yesterday, you can see it's over here in the active today section again, day after up straddle of the 10-day MA. So that means 2 days ago, the price closed below the 10-day moving average. The following day, which would be yesterday, closed above the 10-day moving average. So the market moved from below to above the 10-day simple moving average. That has added that little filter to the test, and now I can put it above a 200-day simple moving average by clicking the greater than sign here, and that completes the study. Let's click View Results. And here we go. These are the results based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at 4:15 p.m. Eastern Time, when the prior session has a up straddle of a 10-day moving average above a 200-day simple moving average, and it closed between R1 and R2. So a strong day that was recently coming off of some sort of weakness, as it was below a 10-day moving average, and now it's above. This is taking place with a gap up the following session. So we've got 55 samples to look at in the S&P, 64 in the NASDAQ, 54 in the Dow, and 48 in the Russell. And the win rates on these were fairly strong. I was a little surprised. I've never looked at this pattern. You know, there's so many different things you can look at and discover. This is one that I had never seen before, but it kind of stood out to me this morning, so that's why I'm sharing it. But win rates are strong. There are win rates for the S&P coming in at 69%, 64% for the NASDAQ, 56% for the Dow, and 60% for the Russell. So all four of those are at least mildly favored. A couple of those are fairly strong. The average win to average loss on these, the average win is coming in larger than the average loss on two of them, the S&P and the NASDAQ, and then it's very similar in size for the Dow and the Russells. So historically speaking, this pattern has favored the bulls. We'll find out if that plays out again today or not, but I thought this was an interesting pattern. I hope that you do too. And again, the gap direction does matter. We are currently trading higher at the time of this recording, but if by chance we do pull back and gap down, these stats would change quite a bit, so you would want to rerun this with a different opening filter. Hopefully you found that helpful. Good luck today, and we will see you next time.